Some economists believe that a Great Depression could be repeated given what happened with Smoot-Hawley. Two-part question: do you think that's the case? And if that is the case, how or what should the appropriate policy be to avoid such a Great Depression?
Well, you can't. You can't avoid it. You can shorten it.
It's a great honor to welcome back to the show Dr. Ron Paul, former congressman, three-time presidential nominee, and host of the Liberty Report. We'll be discussing with Ron Paul the outlook for the economy and also his assessment of the Trump administration's progress on fixing the economy, as was the plan from the Trump administration. Dr. Paul, it's an honor once again to host you. Welcome back to the show.
David, nice to be with you again.
Trump recently tweeted, or not tweeted, but posted on Truth Social that the economy is booming because of tariffs. We'll put the exact quote on the screen. How would you assess that statement?
Well, I think that's very confusing. You might find one group of people or one person that benefited or one company by tariffs or potential tariffs. But tariffs in general are not very good. And even if somebody benefits by saying, oh, we're going to cut off all your competition, there'll be adjustment. It might be good for a while, but it's not a solution. It's the opposite of free market choice, and it interferes with market choices. So I think, if somebody is deceived into thinking, oh, tariffs are a real benefit, they always argue that it is a benefit. I think that's confusing because I think it's a tax. I think it's a tax that goes back on the people who live in the country who installed the tariff. So if we put tariffs on imports, yes, somebody has to pay. Eventually, most of it goes back to our consumers. And I see this not as an economic issue as much as I see this as a moral issue on rights. If we work hard and save our money and we want to spend it, we ought to be able to, in a free country, spend it where we want. So if I can buy tennis shoes for half the price that I have to pay if I buy them in the United States, I ought to have the right to do it. So it's an issue of rights for me. It's also, so much is disguised by coming up with some of these schemes. Well, we'll raise so much money we could do away with the deficits and we could do away with the income tax. I don't buy into that.
Right. Now, recently, a federal trade court struck down Trump's reciprocal tariffs. A federal judge on a three-judge panel on the Court of International Trade said Trump exceeded any authority granted by the International Emergency Economic Powers Act in imposing the import levels. Now, you've been an advocate of constitutional limits for quite some time now, Dr. Paul. What is your take on the court stepping in on tariff policies?
Well, it all depends on which court it is and why they're doing it. Basically, if it's a voluntary arrangement between people, between corporations, between countries, it'll be left alone. Unless under extreme circumstances, if we have a declared war against somebody, you could, have some controls for national defense. But all this stuff that's going on, it's all protective tariffs. The people who are making the loudest noises get the attention, and they're always advertised as being something wonderful. But it doesn't make a country richer. It causes a lot of problem. It distorts markets. So it doesn't end well. It's certain that the tariffs of the Depression era were not a benefit to the economy. And it will not solve the problems of the malinvestment and the deficits that accumulate with fiat currency and the so-called stimulation of the economy by a central bank just pouring out money and counterfeiting money, because on the short run, that sounds pretty good as long as people are believing in the counterfeit money. But it all comes to an end. And I think that's why we're facing so many problems. And that's why I think even though somebody might say, oh, the tariffs have helped my company, the tariffs are not an answer to the problems that we have now. I mean, the deficit is the problem. And this is not going to solve our problem of the deficit spending by Congress.
Well, speaking of deficits and spending, Elon Musk just left DOGE, the Department of Government efficiency. He claims that he's left with $175 billion in savings already, but that's still a far cry from what was originally planned. Dr. Ball, do you think that DOGE can still succeed in its mission despite Musk leaving?
Well, I think it has achieved a whole lot, but they shouldn't even be overconfident, because if they say there's $175 billion and you question, well, that's small compared to the trillions that have to be dealt with. It Sometimes those cuts never pan out, because it might require court reviews that might cancel some of this stuff. It might be technically constitutional if this type of spending and interference should be done by the Congress, not by an executive order. So executive orders and trying to solve all our problems, and right now people are so willing to accept. Just think of many executive orders have been, just intervening in the economy. I don't think that's very helpful. Some executive orders are necessary, but you can't manage an economy and a world economy and all the tariffs and use it in foreign policy by you threaten people, you put them on and say you do it our way. Then we're going to make it worse, or we'll even become militarily opposed to you. But if you do exactly as what we say, we're going to reward you and bring you into our empire, and we will treat you like a member of the empire. So it's too much intervention. I don't think the founders ever dreamed the president would be as powerful as our presidents have been today, because since 1945, and of course I've worked hard on us needlessly getting involved in war. We've fought a lot of wars. People say, oh, well, they're police actions, they're just national defense, they're necessary. No, we've been at war, and it's done by executive order. The president just sends in the troops, and then he comes back and say, oh, the troops are in harm's way. You're not going to send them the equipment to fight this war. So it goes on. And that to me is a big problem. And that is also the big spending area, that there's no intent, it's very few bipartisan support for cutting back on military. And the military industrial complex has a lot to do with that. And people get motivated to believe that if you want to be patriotic, you can't ever cut a penny from the military, which is a bunch of nonsense. I think if you really want to be patriotic, you ought to defend the Constitution, fight only declared war, and follow the Constitution on monetary policy. But to come in and pressure the members of Congress through lobbying and all the pressures that are put on a member, that if you don't do it, we'll get you kicked out, we'll find somebody to run against you. So that's a system that I think is very, very bad, and there's no benefits from it.
If I offered you a $100 bill, but you had to pay me $115 for it, would you take that deal? Of course not. But that's exactly what happens when you purchase gold and silver, and high dealer markups at significant costs to each purchase. Well, that's where today's sponsor comes in. Today's sponsor, Bullion Standard Pro, is a membership-based platform providing direct access to wholesale pricing on precious metals. The same pricing dealers and retailers pay, like Costco, for example, except for gold, but without the 40-pound Mayo jars. By aggregating live market maker bid-ask product data, it offers real-time pricing with significantly lower spreads compared to traditional retail markups. For context, traditional dealer spreads on popular bullion products can exceed 23%. With Bullion Standard Pro, these spreads can drop as low as 2.1%, offering you a cost-effective way to buy and sell precious metals. How much can you save? Hundreds, if not thousands of dollars on a single order, depending on the order size, of course. So to learn more, visit bullionstandard.com/pro and use the promo code David Lin. Your first month of membership is free, with no commitment required. Link down below, or scan the QR code here to get started. Invest smarter now.
Well, you recently wrote an article discussing the big, beautiful bill. And in particular, you wrote that the media and big spenders in both parties are screaming about how President Trump's budget proposal contains large reductions in federal spending. However, even if all of President Trump's $163 billion of proposed cuts are enacted in law, the federal government will still spend about $1.7 trillion next year in its discretionary budget. So maybe walk us through your analysis of this big, beautiful bill and whether or not it's going to help the economy.
Well, it's a big bill, and only the people who think it's wonderful, who think they're going to get benefits, or some of their activities is protected. But all that talk, no matter whether they say or even plan to cut it, if they run out of money, they always, have emergency funding. I can remember being in Congress and they cut some money out of something like food stamps or something like that. I said, they're not going to do that. So about halfway through the year, the budget year, they ran out of money. So there was an emergency budget. And there's always an emergency, whether it's foreign policy or domestic policy or a hurricane or a concocted episode of an epidemic that they had to deal with and end up with COVID, and everybody wants the money spent there. And then they find out, oh, it wasn't even good medicine. Why weren't the doctors involved? Why were the politicians doing it? So it's really a terrible system. And the deficit, the big deal is that they're raising the debt limit by $5 trillion. No matter what they say about what they're cutting right now, it hasn't happened really. But I think that Musk did a good job in the sense calling our attention to it. And I think the best example of calling attention to is USAID. And nobody could believe all the nonsense and waste and corruption in that. And they have, by executive order, gotten rid of some of these people. But and some argue they're just going to get shifted around. Really, it's not going to be they're going to quit spending. The spending doesn't go down. They change the tune, they shift them around, call it something else. But the big things like what is done in secrecy, like the CIA, you can't even audit it. You can't audit the Federal Reserve. You can't audit the Pentagon to find out where all this money goes. And I argue that if you were serious and you want to do a tough job, we could work our way out of it. But you ought to use a little bit of common sense. I would start with cutting all this militarism. I would start with Medicare for children, even though constitutionally that could be rejected. But you shouldn't do that if we're working to cut things back in a systematic fashion. But I don't lay around and think, oh, next week they're going to start cutting something. They're not going to. They can't pay the debt. So they have to liquidate the debt. And the only way they can liquidate the debt, they don't default. They're always going to pay something for the treasury bills or whatever. What they're going to do is liquidate the debt by paying it off with counterfeit money. So, and that's what we're in the process of. And that's why I had people come to the office and they were concerned. And they say, what are you going to do about this inflation? My grocery bill is skyrocketing. And I said, well, what do you think we should do? They said, send me more money so I can pay the bills. And that's almost it, because people for dozens, if not decades, have been taught in our schools that this monetary system, is a good system and always takes care of the poor first. But the poor never can keep up. The working class people never keep up with the inflation, but it just happens that there's a maldistribution of wealth, and that's why the wealth gravitates into the hands of the wealthy. That's why we have more trillionaires now, billionaires, and the poor are still more numerous, and they're not going to be, they don't catch up, but they will be pacified, and they will get the money, they will print the money, but as fast as they print the money, the prices go up. So it's a dead end, and that's why the whole thing has to be solved with philosophic changes, and that means you have to contest the philosophy of our universities for more than 100 years, because that's how long they believed in this stuff. And that's going to be the real job. So I think we're going to go through the ringer first, and then who's going to pick up the pieces? Are we going to resort to maybe looking back and taking the good stuff that the founders believed in and introduced and go that way? Or are we going to go to more authoritarianism? Now, the cultural Marxists had a goal: chaos in the streets and in the economy and around the world. And then we will usher in an age of radical socialism. And it looks like they've accomplished the first leg. There's a lot of chaos out there. Right. And people people will want to be taken care of. They don't want the riots in the street. So, but I see it as an opportunity. If people are promoting the cause of liberty and there's chaos in the streets, we better get out there and lead the charge and say, you don't need more of what caused this. You don't need more authoritarianism. What you need is more liberty and more peace. And that means you ought to obey the Constitution.
Dr. Paul, let's evaluate the economy so far under Trump's administration. The unemployment rate is currently at 4.2%, which is not significantly higher or lower than what it was before the inauguration. The inflation rate, headline inflation rate at 2.3% has been coming down, and the S&P 500 is nearing 6,000 points, which is almost at its pre-tariff all-time high. So let's just sum up all the indicators and economic data. How would you evaluate how the Trump administration has performed so far in regards to the economy?
Well, the first thing I do, I question a lot of this. If you take the CPI and the PPI, these things can be changed and have been changed, and I believe they're manipulated, and a lot of people in the markets know that. They might respond to an announcement because they know a lot of other people will maybe respond to a high CPI or something, but ultimately, a lot of people who are involved, they have to anticipate what the reaction will be, but they also know themselves what's going on in the long run. And I think that the important things for me to look at is interest rates. What's happening there? Can the government keep the interest rates down? This whole thing that is so messed. The market wants interest rates to go up and cut back on the exuberance, and that is something like I question what the president wanted to do immediately. He said what we should do is lower interest rates, but the Keynesians always want to lower interest rates after they admitted they had a recession going on, but here it was being advised that we immediately have to raise interest rates, and because they said that was a cure for for a recession, which doesn't make any sense. You have to have a market. Prices are so important in all that we do, and the most important price is the price of money, and that's the interest rate. So if somebody's rigging the interest rates, all these statistics don't mean that much. And the unemployment statistic, a lot of people just drop out of the workforce, and that can make it so the numbers can be, manipulated. And they can be told interest rates is, inflation's at 2%. Well, go to a housewife and talk to a housewife who goes on and has groceries. They'll tell you what they think is happening on inflation.
So then do you think that the Fed made the correct call in not cutting rates, given that you think that inflation is actually higher than what is reported?
Well, since I don't think the Fed should exist, no matter what they do is wrong. But I definitely don't think they should regulate the economy. I would do whatever I could to work in a direction, which is a long way off. They shouldn't be allowed to buy government debt. Because that's the interest rate they manipulate. What if the government had to borrow at market rates? They couldn't do it. The market would crash. So it's a big thing going on. It's the appetite for spending, and it's not just a few people. It's not just the military-industrial complex. Even these people that I sympathize with, the poor and the middle class, who suffer more than the others, they have their lobbyists too. Matter of fact, what is the big weapon of the liberals saying? The conservatives want to get rid of Medicare, and Medicare, deserves some attention, but they want to scare. So everybody's involved, and once they realize that things are cut, and that's why this thing with this plan to cut back on Musk isn't working, because the special interest stirred it up. The people are rebelling and say, you can't cut this, you can't cut that. There's a few that would still say you have to cut back and do the thing, but it's no fun doing what is right under these conditions. So the market will do it for us. They will liquidate the debt through inflation, and they will do that by overtaking the government's interest rate policies. And right now, they never cleaned got things moving again in the 70s. It took the interest rates up to 21%. They're right now they're not planning on doing this,
Wow.
but I think some people worry about it, and that's why they say we better lower the interest rates before we have our depression. So it's too much manipulation, and the monopoly control of the interest rates, especially on the financial instruments of the government, means it's endless, and that's going to last as long as the people of the world accept this. But that's what is eroding. Our military abilities are being questioned, but our prestige in the marketplace is now being challenged by those who would like to see a different money, world currency, and that will come one way or the other. But we have to get more people to understand what sound money is all about.
So that leads to my final question, Dr. Paul. Some economists believe that a Great Depression could be repeated given what happened with Smoot-Hawley. Two-part question: do you think that's the case? And if that is the case, how or what should the appropriate policy be to avoid such a Great Depression?
Well, you can't. You can't avoid it. You could shorten it. They had that dilemma in 1921. There had been the inflation distortions, and they ran into a recession. And at that time, nobody resorted to the idea, oh, recession, let's lower the interest rate. They let things rise, and they had a depression. It lasted. The GDP went down sharply for a year and a half. And when that debt was liquidated, they went back working, but they also went back to inflating in the 20s and created that all over again. But in 1921, it was liquidated. The market will liquidate it no matter what the government does. If you do things that seem to help, what you do is either make the bubble and the need for adjustments even greater and the danger even greater, because you run into the political problems. And that, to me, is the greatest danger of all this mess, is that the wealth is distributed poorly. The wealthy get wealthier, the poor get poorer, and that leads to a political crisis, and that's part of what we're facing today.
Very well. Thank you very much. Where can we follow your work right now and learn more from you, Dr. Paul?
Well, Liberty Report, Ron Paul Liberty Report. We broadcast Central Time at 11 every day.
Okay, very good. Follow the Liberty Report down below, and thank you very much, Dr. Paul. We'll speak again soon. Take care.
Thank you.
Thank you for watching. Don't forget to like and subscribe.